Hey, good afternoon, everyone, and welcome to the PivotBoss Closing Report for February 9th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the current session here. This is a look at the daily time frame of the ES. It's become apparent here. We have the previous week's low, 1865, right here. You can see how that level has been very significant in the charts. Price went offered through that level and has since stayed below it, with price being defended at that zone intraday, and that led to a rejection lower. So right now, that's kind of the pivot to watch, is that 1865 pivot. Above that pivot opens up a return back to 1921, the HVN, and below it implies further downside price discovery into 1811 and a retest of those January lows at 1804 quarter. It's going to be a very important test there. But right now, it's kind of too early to tell how this thing is going to continue to play out. But it's been our primary idea that, given the fact that price went offered at this HVN here and how price played around that zone, the expectation was for a move into 1811s. So it's the expectation here that should price remain below 1865, we should continue to chug our way downward. Additionally, we do see an inside day formation here. Inside days typically suggest digestion, compression ahead of future expansion. Again, any breakout from this range here could spark a nice move, but below 1820 here really puts a lot of pressure on 1804s and could lead to a continuation into that CLV in at 1746 that we mentioned yesterday. So a lot to think about in the ES here. If we look at the ES and the RT time frame here, we pretty much nailed it this morning in the room. We had our key range identified here. Let me bring this over to the right a little bit better. Basically, we had our key range to the left here, and that key range, 1854, gave us a zone to watch, as did the bottom here. We saw price basically squeeze below and above it. So here's a bull trap, led to a move back against it. Here's a bear trap, led to a move back against it. And in the room, we were watching for any type of rejection between 54 and 56. And here it is, calling it back to VPOC at the time, 1835 to 1832. So solid rotations there off of that during our trading room time. And it just shows how important these key ranges are. Now, moving forward, what we want to do is see how price plays out here at 1865 again, because I mentioned before that if price could get above 56 or 57, we could see a decent squeeze higher. That really wasn't the case. We saw a squeeze, but then the previous week's low came in, and we saw a defense at 1865, or just shy of that level. So right now you see a major sideways range here developing. This is ahead of Janet Yellen and the Fed coming out. She has testimony on behalf of the Fed there tomorrow. So you can see prices here are coiling significantly right now. Man, this is just taking too long. How long was that? 3 minutes for one. Let's not go into that. Let's just talk about how it's coiling. All right, dropping down into the lower time frame here. Here's the ES. The ES, if you kind of bring out the view a little bit, what you notice here is we had a downside push here from this range, and now we've had some significant sideways coiling behavior. So much so you've created a major distribution here of volume down here. And this is all coming up ahead of, in anticipation of, Fed Chair Janet Yellen's testimony both Wednesday and Thursday at 9 a.m. Central. Obviously, that's what this is all about here, coiling up in advance of that testimony. And we could see whatever she says manifest itself as a result of expansion from this range. So above 1865 pushes price back to 1903 and 1921. A continued defense of 1865s here implies continuation into 1811 with a shot at seeing a push through 1804 and into the next major downside targets. Looking at crude oil now, here's crude oil in the daily time frame. Obviously, when price failed to hold here and dropped, when it came back and we saw rejection at the midpoint of the key range, we were looking for a continuation downward, and you see 4 straight sessions downward, big time movement. We also talked about in the previous session here that bulls were defending 29.25 to 29.40. Many rotations at that level. But I also mentioned that sitting on that zone here, you have lots of sell stops below that zone. So below 29s slams this thing much lower, and that's what we saw today. A big time continuation to the downside, and it's coming into the bottom of the key range here, 27.24. What I've mentioned before is prices traded predominantly in the lower distribution of the key range here. That points to more downside price at discovery. Additionally, if you cannot hold 27.56, the expectation is for a push into the next expansion targets to the downside. And obviously, the closest two are 25 and 50% expansion of the key range. That puts you at 24.63 and 21.69. But if you're looking at a full-on 100% move of this key range, you're forecasting 1581 if we break this thing to the downside. I know that seems out of reach, but we'll cross that bridge when we come to it. Right now, any violation of this level would target these two targets first, and then any retest or bounce should be seen as a likelihood for another continuation lower. So we'll see how that continues to materialize. Looking at the intraday time frame, one thing that we were looking at throughout the previous session was the key range here. This was our key range yesterday. I talked about it in the closing report in addition to the pre-market report. And what we have here is a key range right here. I mentioned that we were coiling inside this range, but expansion could fuel a move into the 100% expansion target, and that's 27.76. That's basically one tick off the low of the day, as the low came in at 27.75. Just phenomenal movement according to our key levels. Additionally, we were able to identify a key range here that formed kind of, as an impulse type thing based off of a large buy imbalance that came in. That helped us identify the initial swing breakout from the larger range. But nonetheless, we reached our target. Solid move. I would say that any bounce back into 29.57 still needs to be defended by bears for a shot at continuation lower. Short term, this 28.67 is important. Already you can see a defense at that area. That's the 50% expansion. Bears want to defend here for a continuation lower. Above this level, squeezes back into 29.50s. All right, taking a look now at gold. Gold's been significant. Big time parabolic move. Again, we've had this thing nailed. We were right on top of it this whole time. We had basically this saucer bottom and this major parabolic expansion. We had this thing going into 69s, and then we upward revised into 92s, and since we've seen a continuation. I have you watching 92s though, because if there's a failure to hold above 92s, we could see that first major swing move backward. So that's what we're going to be looking for. Does price fail in this zone, or do we see a continuation? So that's what we're going to be looking for. Now, we do have 1206 above, and that's another swing move high. So we could see a move into about 1206, 1207. But again, if we look in the intraday time frame, you'll have a better idea, because after this major recent swing move higher, we've seen what could turn out to be a distribution range. So right now, prices are attempting to establish acceptance up here, but if there's a failure to hold above these 1185s, look for a quick move back to 5-day VPOC at 1155. Defending 1185 implies a continuation into 1206 to 1207. All right, looking at the NQ now. Here's the NQ, and this is the daily time frame of the NQ here. What you see is a continuation to the downside ever since price failed to hold above the 42.26 key level, the midpoint of the August range. Failing to hold above that level opened up a continuation into the bottom of the August range, which is 38.93. That's where we're sitting right now, 38.93. So if I zoom this thing back out here, you'll see how important this is. 38.93 here, the bottom of the August range. Here's the midpoint of that range. Here's the top of that range. The way I was able to forecast a potential sell-off heading into the beginning of the year is that price attempted to hold above the top of the August range for several months, and then you could just see a pattern of lower highs week over week rather. So once that failed to hold, the expectation was for a move back to the midpoint and the bottom of that key range. So this key range is still in play, and it would not be out of the question to see price reverse all the way back toward 44.06 and perhaps even test the top of the key range at 45.58. Wouldn't be out of the question. We just have to see how this thing plays out around the bottom of this key range at 3900, because any failure to hold above that zone, there's an LVN there, opens up a continuation into 37.27 and 35.60. So this could be important and appears to be a major inflection point in the charts right now. Looking at the NQ and the intraday time frame, a major trading range developed here. We had our key range that we watched in overnight trading there. One thing we were talking about today was how the open was bid. The open was bid in the trading room. We talked about how aggressive that move was. Anytime you see how bullish that move is away from the open here, typically speaking, the open is still bid. So when price comes back, that's still an area to defend. You saw that today. We have a very large, wide range trading range that developed today. I would say that this range right here is going to fuel the next major phase of expansion, especially on the heels of Janet Yellen's testimony. Again, that could spark significant expansion from this range. We have 3830 on the downside, 4,000 on the top side. Look to fade the edges of the range. In the meantime, until then, we're looking for expansion, because once we see expansion, there could be significant implications ahead. Watch the range closely. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.